Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday, November 5th. Michael Boutros with you on the horn. Hey, Jay, Pete, Ted, great to see you guys this morning. So, where do I begin? We're still in the muck, right? So, election is leaning one way. Markets are kind of pricing stuff in. We've got a rally in the SPX, which is a near-term breakout. We got a breakdown in DXY, which is coming towards some pretty major lateral support levels. Breakout in euro, we'll talk about dollar yen, breakdown there, Aussie dollar, dollar CAD, Kiwi dollar, gold, sterling, and we'll hit dollar Swiss real quick. I'll be writing a piece on peso for daily FX. I'll show you that one as well. Not really actively trading it, but worth going over, I think. All right, so if there are any other questions or trade setups, as always, feel free to drop them in the message board at any time. Here's the DXYs that looked last night. Look, at the end of the day, we set a pretty radical weekly opening range right below Fibonacci resistance at 94.25. The downside break here is problematic, okay? Now, let me show you what the real one looks like right now. Now, we've taken out the weekly range lows. Okay, here's what we've been working with, right? We made a breakout of this descending formation, shifted our focus higher last week. We opened this week saying, watch out, we're at resistance. The pullback held support. The rally filled to the weekly opening range highs. Here's a subsequent breakdown. And again, that election move that doubled back, like we always say with these major event risks, like 80% of the time, maybe I shouldn't say 80, but a high probability of the time, the initial move is the fade. That's what you want to take the counter move. So we saw the drop happen, broke support, acceleration, 618 made very little time, 92.89 right through that. Here's some interesting levels now. We're going back into that 52 level. Just lower is the 2018 open. Here's what it looks like on the daily chart. You've essentially made a monthly reversal, okay, if we break these lows. Here's last month's highs. We took out last month's high, broke down. Here's last month's low. That would be a monthly range reversal, right? The break below 92.28 is what would open the spigot here, really open things up for a larger decline in the DXY. Here's the weekly chart. I know I'm going backwards, but I want to show you the impact of this week's move. This is an outside weekly reversal, okay, after a breakout. That's not good. That is not good. That's typically a very bearish development because you've made a break of multi-month downtrend resistance. Remember, 2 points is only speculative, but this is a 3-point touch. Here's the breakout. It was a weekly close above last week. Okay, so it kind of validates the break of the downturn trend. But we held that 618. We held that 2016 low week close, right? Here's the reversal this week. Take out last week's high. Here's a break of last week's low. All right. Now that doesn't take us out of the woods yet. Again, I want to bring your attention to basic slope. 2011 lows, nothing fancy. One touch, two touch. This same slope, I've talked to you about this a million times, has been instrumental in every major turn for the DXY. Here it is. Here it is. It's still below us, right? So outside weekly reversal does put a bearish tone. Laterally, we're still above key support. We're still above multi-year uptrend support. So what does that mean? Well, for one thing, it means, yeah, we could drive lower in the DXY for sure. But you really should curb that expectation. You really should curb that appetite into 92.28. Right? If we buckle below 91.90, that was the 2016 lows, right? That's sort of the range that we gave early in the year when we were collapsing. That's where we would need to mark resumption of like the broader, you made a yearly reversal. You essentially took out last year's high and last year's low with this move. Super bearish. So it's all about this region here. It's all about this region here. Again, you drill down deeper into the charts. Here's the daily. There's 92.28. There's those the lows that you made back in early August the low day close for the year, okay, which was marked right here on September 1st, that is 92.30. And then you got 2018 open, 92.28. So it's all here, all right? Don't know if it breaks, but that's the inflection. Weakness below that, we're in trouble for the DXY. Look out below. If that holds, could be a decent place to start building a base. Okay. Again, pistol to my head, the way things look right now, I would count for at least a drive, a push, but I'm not making any bets on this. Okay. Watch 92.28 on a weekly close basis for DXY. Any questions? Again, no change to any of those levels from yesterday. We're right here, 92.52. Just below that is that 92.28 level. All right. So that is DXY, number one. Number two, where does Euro go? Well, the breakout in Euro is heading towards a near-term resistance zone at 1859. I've been talking to you guys about that for a while. Let's take a quick step down for Euro from the top-down approach. Here's what it looks like on the weekly chart. Unlike DXY, and this is, analysis I love looking at. It's just, it's not a signal, but it's a tell. It's added evidence to support your thesis. You're right. Differences in price developments in related assets. So whether it's non-confirmation high, so related assets, one makes a new yearly high or a new opening range break high and the other one doesn't, or things like that. Here, what we're seeing is that same phenomena, but with the opening range, with the outside reversal candle, right? So DXY has already marked a pretty radical outside day reversal. We've taken out, or outside week reversal, taking out the previous week's highs, taking out the previous week's lows. Euro's struggling to do that, right? We took out the previous week's lows, but we haven't really taken out last week's highs on a close basis, or at least pushing to try to do so. 1835, 1823 on a weekly basis is what I'm looking for. We've been talking about that for a while. It's the 618 of the 2018 drop. It's the high week reversal candle close, where we closed that day. Nice region. It's slope resistance. We're there now. So Euro's a little bit more at a critical juncture here, where I think DXY's got a little more to go. But again, that might be in and of itself the non-confirmation. I don't know. This market is still tilted towards, or still sensitive to this developments, whatever the hell happens with the election. I haven't taken a moment to speak about the fact that we still have, the Fed on tap later this afternoon. No expectations change to the rates, obviously, but that commentary, the accompanying presser with Powell will really, that could be something that shakes things up a bit, right? The focus is still on the presidency and all this headlines coming out, and how protracted, how prolonged that drags. But I think markets are taking it in stride. I think FX is dealing with it a little bit more aggressively. But anyway, I digress. Here's Euro on the daily chart, right? In the last 2 days, we've taken out the entire October range, taken out the range lows. Here's the range highs for October. So looking for something here on an intraday daily basis. Remember, it's 1830, right? On the weekly chart is what we would want to see close to kind of clear the way. On the daily chart intraday, we have 1859, which is 618 of that drop, right? We're there now, upper parallel, pretty decent spot. Now, the scalp, what was last Euro update? It was on the 3rd. The scalp looked like this earlier in the week. I was working with this near-term slope. I told you guys there's 1786. If that breaks out, we're probably have this near-term downtrend, right? You're looking for the breakout at that point. Well, we got that. Here's 1780. Here's the break, near-term downtrend resistance, right here. Popped higher. There's the 618, 1859. Caught the highs to the pip. So again, it's a very precarious situation, guys. And don't forget the market conditions that we're trading within. Okay, so it's important to still be nimble. It's important to still be light. Don't get suckered in. These time periods where people see opportunity and they kind of want to jump into the market is actually where retail gets chopped up the most, right? They can really do a lot of damage to their account in just a few days, and now we're right back, the next couple of weeks trying to rectify those mistakes. So I'm just trying to pace everyone. If you don't have a position on yet, look for some of these exhaustion trades to give you a tell. Okay, don't start chasing. If you are holding long euro, short dollar, it's a good idea to kind of pace a little off as we go through these levels. If not, bring down your stops at least. Everyone should be in the money stops at this point on any stretches that you've taken on the dollar, because things could get, there's still 2 days on the week, and it's been a hell of a week. So just keep that in mind. Questions on euro. So on the pullback, if 1780 holds support or thereabouts, you're looking higher. Here's what it looks like again on that daily chart. This is the big pivot zone. If I take this pitchfork, which is not reflected here, I wanted to do this here in the room so you guys see it go down. This is what we've been working with, right? We've now broken out. We're going to continue to highlight this 1780 region, but let's get rid of that and add that. That's the slope that we're looking at with the daily chart. Okay, puts us right there. Lower 25% held nice support, nice inflection along the median line, break along the 75% parallel. Here we are. Okay, so again, it's make or break. It's Fed day. You still have the election looming. Non-farm payrolls are on tap tomorrow. You don't want to forget about that. Expectations there are for, excuse me, guys, just one moment. A print of I'm sorry, 600,000. Okay, it hasn't changed. So the previous read was 661. Unemployment expected to drop to 7.7. At the same time, and we're going to go over dollar CAD in just a moment. You're getting the release of CAD employment that's expected to come in 100,000. Very variable print, but they also expected to see unemployment downtick to 8.8 from 9%. So keep that in mind. That's on tap tomorrow. FOMC on tap tonight. We're still likely to get some leaking results, whether it's confirmation on where Nevada goes or if it's confirmation on how Arizona goes. Those are still up in the air. So there's a lot, guys. Try not to get overwhelmed. I might kind of seem like I'm throwing a lot at you, but as far as price action is concerned, the reason we're so precarious is because where we've kind of peaked on these moves. So that's euro number 2. All right, dollar yen. Big mover in that we are kind of challenging a pretty major level. So DXY, we covered. Here's hit dollar yen real quick. Here's dollar yen. So this one was printed back on the 3rd. And remember, for dollar yen, and if you go back always, for anyone new in the room here, remember you can always see the weekly and daily charts if it's not accompanied in the previous update. So if we go to the previous update here, remember the major level of support we talked about for so long, 104.12, 104.46. That was the weekly zone. Daily zone is right here, again, 104.12. On the intraday chart, we were looking at 104.01 into 104.12 as sort of the key zone to watch for support. Early this week, okay, we had rebounded off that key zone, and we were looking for this bounce to find some exhaustion in this mark right here. Remember, we talked about every time we came off the zone, the rallies, the recoveries were being more and more short, or lesser of a intent on the recovery. So we were looking for exhaustion ahead of 105.20, need to break below 104 to mark basically 104, 103.40 would be the first level you'd be looking for support. Here's what it looks like. Okay, that rally maxed out Went through 105, went a little bit higher into 105.34, give me a 15 pip allowance on an election day. I'm sorry about that, but it was a really nice hold, and it completely collapsed. If you're still holding this one, again, I would just be bringing my stops down, okay? Probably shaved off a little at 104. If you didn't do that, good for you. 103.43. That's the next level down. That's the 786 retracement. This is a big deal. Anything sub 104 on a closed basis keeps the focus, in my humble opinion, again, down at least on this 103.43 level. Here's what it looks like, again, on the longer term charts to give you the impact here, okay? Not one touch, not two touch, but three. Failure, break. Need to see today's close, okay? Close below 104.12, keeps the focus lower. 103.43, just lower. You have longer term slope right into the 103 handle. So people who trade dollar yen love big figures. They love 105, 106, and 107. I get it. Psychological barriers for sure. 103 happens to line up pretty decently with that slope for this multi-year pitchfork we've been following. Very fruitful, okay, as far as the gradient. And we'll look for that if we get any deeper below 103.40. Weekly chart. Again, don't take my word for anything. Here's what the charts say. Okay, so it's an outside weak candle. It's not a reversal because last week I think was a down week as well. But we took out last week's highs. We took out last week's lows. We're breaking major key support. Watch the close of the week. Add to that a little bit chalk. If you've got a little tab, put it on the side of your desk. Write one more thing. Watch momentum. This would be the first 40 break we've seen, essentially in momentum. You know, you could say the March coronavirus, whatever, essentially since last year, since 2018, even earlier. No, 2019. I'm sorry. It's the last time we were sub 40 in momentum on a weekly close basis. So we are so critical. Now, what could happen? Well, this is dollar yen. So I wouldn't put it past this thing, guys. If something happens with the election or all of a sudden something starts to lean, or I couldn't see Powell saying anything that could really reverse this break. But for argument's sake, if we were to close back above 104 today, that would be the fake out of the century. It's dollar yen. I wouldn't put it past it. That barring, you're looking for that tag of 103.43. Questions on dollar yen? Again, very reactive to dollar data. You still have FOMC, you still have non-farm payroll, elections on tap. Okay, so a quick segue into SPX. Just wanted to cover this breakout. We talked about 33.97. That was our line in the sand, even into the start of the week as we were coming off of key support. We never really made it into this region. Remember, 32.26, 32.20. We talked about that for a while. The yearly open, 100% extension, very nice pivot range and price, former swing high on a closed basis from back here in June. It was loaded. The decline broke last month's opening range lows. You got that drop into the close of the month, but you didn't quite mark that threshold. Here's the breakout. Here's the breakout. So on a near-term front, absolutely, yesterday did constitute a breakout, okay? I'm gonna remove this here because we're all here in the room together. I want to see you, to see this. And just to kind of clean this up on the daily chart, shows that we're still in this multi-month consolidation, right? So again, a trade that post-election is stretched. You've got a pretty nice rally, okay? You're coming into trend extremes on the near term. On this one, it's the contractionary range we've seen since the low that we made back in July, or August, I should say, right? Higher lows, lower highs. Watch this region here. 35.45 is what I marked as the breakout. That's last month's high. That's the 88.6 retracement of the drop from the record high. That's sort of your breakout zone. But watch out. I can't get bullish from here. I'm not saying don't be bullish, but don't start getting bullish here if you're not already in. Here's what it looks like on the intraday. Again, 35, 45. I like room for that, even on an intraday spike. So on a daily, you want to kind of see that slope hold on a daily close basis. But intraday, let me copy that real quick. On an intraday, the ascent seems to be continuing to follow this pitchfork that we just added in. I don't know if it was, I guess it must have been last week on the recovery here. We were looking for failure at that region, break below 33.40 to mark resumption. That held. Here's the breakout. On the way we go, right? So look, if I copy that line here, right, that line off the highs, let me just clean this up a little bit, right? It says 35.30s, right, 35.25, just a bit higher is the 88.6, the upper parallel if you get a topside stretch today. But you get the picture, right? Imminent danger to the immediate advance. Now, ultimately, it's constructive above 34.30 on the near-term front, right? 33.40 is what I told you in the daily chart. That would be the correct, like straight up bearish influence. But on the near-term ascent, you're constructive above 34.30, topside resistance. Watch 35.25 into that slope. The big zone, 35.45 would be a more monumentous breakout if that gets bested. But I'm on the lookout for exhaustion into this region here for SPX. Questions? All right, I got to pick up the pace. That is SPX. Number 5, Aussie dollar. Okay. Excuse me. So I'm going out of order today, but we'll get through it. Here's Aussie. The basic zone of influence, it was all about 70-12, 70-42. We've been talking about, or 70-16, 70-42. We've been talking about this zone for years. It's last year's open. It's this year's open. It's a major inflection zone in price. We opened the week back again, testing this zone of support. Here's what it looked like on the daily chart. Now, we were going to necessitate a break below 69.60. That's a basic 236, and that's the downslope. And we noted, look, if we get a break below that, we're looking for straight up, the topping mechanism to resume. Well, Aussie had a little bit different of a game plan. Didn't even make it into the 236. That ended up being the low. Remember, back when we published this, we were looking for the rebound off here, right? Long near term, the long side, but ultimately we're looking for exhaustion and possible revamp or get back on it at that 618. So it was a great rally, really nice play. Unfortunately, longs, you'd be out by here, and it continued to break because we were looking for exhaustion. So here's Aussie on the intraday chart, again on the second, as we were probing that key zone. Here's the daily chart now. We've broken downslope resistance. We've broken Fibonacci resistance, but we're right back at that key pivot last month's high. The 618 to drop off the high. The opening range highs for August. 72.43, 72.52, we're there now. All right, so rinse, wash, repeat. It's the same thing as all the other setups. Here's the intraday chart, and here's what it looked like, again, right off that vault. Broke through, 618 and 71.46, that was a mess. Test again. Here we are at 72.52. We're up here. So for Aussie, it's the same scenario, okay? I'm not going to get excited about any fresh long exposure from here, albeit we are in a breakout. If you're holding longs, be mindful of 72.56 on the way up here. You look for slope. You look for something to give you some guidance. We can go ahead and scratch this at this point, and try to see if we can put some picture on this. This retracement, null and void. The high's been broken. First, I'll take a quick picture of the near term here. It's not the cleanest. It would put you at resistance right now. Again, I don't know how helpful that is. We could try to take a little bit further of a look out. Last low, high, low. That might work a little bit better. All right, not much gradient can be given to this slope, in my opinion, with conviction just yet. But 72.56, keep your focus on the lateral levels here. 72.56 resistance, topside break, 73.30 into 73, this zone here, which aligns with this mark right here. Form a slope support. Turned resistance, resistance again. That's this zone. Questions on Aussie? That's number 5. Number 6, Looney. Here's dollar CAD. Again, a clear breakdown here. We were able to identify in dollar CAD for sure the major resistance zone. We talked about that earlier in the week. That was marked by that 33.75, 33.81 level. Nice 618 extension, 618 combo, or I think that was an 88.6 combo. Yep, it was an 88.6 combo. Remember how 88.6s with the COM currencies work really well. So really nice level, right? I'll just show you the chart right here. Whoops. The whole focus was on this 32 level, 31.99, 618 retracement of the advance. It was basically uptrend support. The break looked legit. I think we spoke about this in the webinar, right? The recovery went way beyond where I wanted to. Like honestly, this was our bearish inval, but it even broke higher and then recovered back below. Here we are, right back at key support. Same trade. Euro at support. Dollar yen, looking lower. Dollar index, Aussie, dollar cat. They're all doing the same thing. They're all testing very provocative levels. 30.46, 30.56. Again, it's the September open. It's that 618 combo right there, looking for inflection. Here's what dollar CAD looks like on the daily chart. So some of you might be looking at it from the confines of, well, Mike, it looks like a near-term consolidation and a break of the downside. Typically, I would be agreeing with you guys, but there's a couple of different things. So if you're a purist, right, the slope, okay, if you actually take it from the low, is there. Let me make this line see-through so you can see that, right? There's the low. So that's the second touch. Yeah, that could be the break. I was working with this slope because that'd be 1 touch, 2 touch, and we had 3 and 4 here. That could be the break. Either way, it's a low conviction sort of threshold for me, right? Because you only have like a third touch and then they move lower. Here's the 618. Here's your low day close. Okay, I don't have it marked up, but it's right in this region at 30.60s. So what do you do? Again, if you're one of those guys who had the ballsy move and took the dollar CAD or took the dollar short, generally speaking, you're shaving some off. Take a little off, take a little off, bring your stops down, bring your stops down, bring your stops down. Eventually, you're gonna have like 1 or 2 lots left, or if you're working micro lots, whatever, it doesn't matter, standard, micro, mini, you'll have only a couple positions left, and that's okay. Okay, the degree of every point lower is giving you less, but you're much more protective, and you don't want to be aggressive in this market. So 30.56 is the level, my humble opinion. I'd be taking something, cleaning up the table a little bit, make sure your stops are inside. Would I try to fade is a question that I don't think I have enough information to even attempt yet. If it's gonna bounce, this would be a nice spot, but there's nothing in price action that's giving you that indication. You're simply trying to catch a fallen knife. There's, that's just not in the cards for me, not yet. All right, so again, another trade where we kind of need to update the levels. I wanted to just keep this on you to walk you through how it went down. Let me see if this yields anything. No, puts this 25% parallel right there. Okay, we'll revisit this. For now, might be worth a peek and put resistance on the near term front right around like 30, 3140s. Interesting moves in dollar CAD. Watch this support. Watch this support. That's number 6. Number 7, Kiwi. So is the Kiwi a breakout or not? Tough call. I think it's going to be about the close today. Here was Kiwi last night as it was approaching once again this key resistance zone. Beautiful moves. I hope someone caught this week too. Here was Kiwi back on the 2nd, right? We were just opening up the week. We'd come into the support zone. Whoa, watch this confluence. 66 handle. That's the weekly open now. It's the monthly open now. As soon as we popped through, we said, watch that support. Looking for a rally into one of these zones, but a really nice spot to look for exhaustion, right around 67. I've removed that level. It's the 2019 opens right here, right? So we rallied right into this, ripped into key resistance. This was bearish in Val, and then we plummeted, right? So really nice trade on the way up. If you had the wherewithal to try to take the short, there was a really nice signal there. You even had building divergence with a higher high in price, a lower high in the oscillator. So there was a signal for the short. That fizzled out real quick. Okay, so does a break of this keep the focus higher? Yeah, it does. Yeah, it does. Okay, so above 67.33, you're still looking higher. I have 67.55, which is the 38.2. Okay, it's on the daily chart. So we can now go ahead and ditch this slope. There's your 38.2. Okay, the highs for the year are just above. I have them labeled, I think, on the intraday chart here. 67. It's basically 68 is the high. And then onwards, right? This slope we're coming into here is pretty big stuff. It's off the highs from 2017. Here's Kiwi on the weekly charts. Pretty big stuff. One touch, two touch, probe, probe, probe. We're there. What do? 67.60 on a weekly close basis. That's what you need to beat. So yet I say again, one more trade at resistance. All right, let's hit Sterling Swissy and we will round it out with a look at some of the commodities. Here's Sterling. And our last update on Sterling was on the 1st, right here. Here's British pound. So here's where we look like, ooh, this was British pound right into the start of the week. It was actually a beautiful play. Again, these opportunities are breeding lots of different trade ideas, guys, right into these releases. The problem is that if you're not already positioned and the release happens and you're not quick enough, you don't have the wherewithal to get in, which is fine, okay? The average person won't be able to take advantage of these swings, but that's where we come in. We try to alert you to these levels so that if you are there, boy, is it a great trade. So here's one right into the open of the week is kind of like a fairy tale. We were talking about that 618 at 30 at 28.66. Do we get it? Do we not get it? I didn't know, but what I did know is if we cleared, 29.80 here to the upside, kind of wanted to be looking for this to be maybe a false break. It was one of those trades where the dollar short would have been the better cast, right? So if you were long dollar in some of the other trades, this is where we wanted to play the possibility of the weakness. It was picture perfect. We opened the week, slammed right into that 618 at the right time and the right place. Really strong rebound, breakout above that 29.80 level, gave you the run. Now, obviously, again, all these pullbacks were very, very aggressive. So I don't blame any of you that might have eaten a break-even stop or even taken a stop at a loss with those pullbacks. They were pretty radical. But here we are again. Sterling, don't forget where we are, broadly speaking. I'm going to show you two things. First of all, sterling on the weekly chart. Y'all have seen this before. We're poised to make an outside weekly reversal higher, okay? Higher, near multi-week highs. Take that for what it's worth. An outside day reversal higher at the lows is a better signal. An outside day reversal lower at the highs is a better signal, right? But an outside day reversal higher near the highs, here's the last, just a primary just example I can eye out right now when that happened. Well, there's not much more upside. So I don't know with sterling. Again, one of those trades where it looks a little exhausted, but you're actually not at a major resistance level. 31.75 into 32.50. It's a bigger zone, but so is cables, a professionally traded market. Really, really, really critical zone. Okay. You're not really there yet either. So look, if it's an exhaustive trade, it could get higher before it exhausts. I don't want to push sterling from here. The great trade, in my opinion, this week was the rally from 28 into 35 into 30.50. That to me was a beautiful setup. From here, now look at this on the daily chart. Like technically, this pitchfork's still in play. Even if you take that out of the equation, technically you're still below former channel support, now resistance. So what the heck do you do with this? Question is, or the answer is, or at least in my opinion, this one's a sideline. Okay, continue to monitor it. It's on the watch list. I'll have alarm for anything above 31.70 to give me alert, or anything below 28.60. But I don't want to play this zone. Okay, if you're a range trader and you're someone comfortable getting in and out of the ranges and you're really quick and nimble, this is your toy. Right now, again, with the environment that we're in, with the event risk that's on tap, non-farm payrolls, NFPs, still waiting on results from the election, I'll choose my poison somewhere else. Questions on sterling? And the near-term charts, guys, are just a mess, to be honest with you. I hate these slopes now are kind of just being crossed back and forth, not giving me really good conviction. So pistol to my head, you can get into 31.70s. I still think you risk like an exhaustive trade into this if you get the stretch. We'll see. That's your top side. That's your support side right there. All right. Sterling. Okay, last of what we've been covering, at least here. That's number 8, number 9, Swissy. Here's dollar Swiss. Well, my friends, we are back below what level? Who's got it? 90, 90, 90, 80, right back below. This thing has just it's been the pivot of the century. Ever since the initial drop back here in July, we've been just straddling this zone. When it gets bearish or when it's closed below, I'm looking lower. When it's above, I'm looking for the rebounds in the play. This looked like it could poise again. Watch the weekly close here. Below 90, 90, 90, 80. I don't want to touch it. Truth be told, last 4 months, essentially, guys, turned into a wash and a consolidation right around a key support zone. Again, this is just a reminder, a quick 618 retracement from the advance off the lows in 2015, a 38.2 from the advance off the 2011 lows. That's not a typo. Multi-year swing lows and a Fibonacci consideration. So looks like we're just in a consolidation around it. And you look for a more definitive break. I mean, this thing is just a mess. Let me show you the daily chart first, right? So here's our levels. Nice breakout here, shifted the focus higher. Here's last month's open, last month's high. That's a hold. That's a hold. Probing back below 90, 80, 90, 90 again. So if we were to take a little bit more conservative approach here, just some channeling, still leaves the downside to like 90. Now, some of you might be thinking, well, what? Maybe this is just in a consolidation like the rest of them, Mike, in which case you're at near-term support right now. I get that call too, but what are you going to do? Where does that leave you? Your stop would still need to be against that low. That's pretty far out already. I'm not going to try to catch a falling knife. This is a 3-day decline that looks pretty freaking nasty. So again, on the shelf, I gotta see what happens here. Not that we're crazy Swissy traders anyway, but here's one more bit of could be guidance, right? Here's the pitchfork that we were following. I'm not sure when our last Swissy update. Oh, it was right here, right? We had just broken out of this downslope, shifted the focus higher again. That was our key resistance. It held like a charm. Okay, the October open, that's 618. We rallied right into it, collapsed. Here's that pivot zone. Bullish inval was 92, was 91, 91.18 was right here. We took that out early in the week, but there's the major pivot we had to watch for. So, here's a pitchfork off the low, high, low. I don't know what you want to do with that. I don't want you to do with that. If we were, again, it's like the dollar yen case scenario. If we were to close the day back above 90.90, in my opinion, that's an exhaustive low. Try to press the rebound. But from here, below 90.90, 90.80, there's nothing. There's nothing. Like if this break kind of just materializes, there's nothing until 89.30. It's like 120 pips lower. I'm not doing that. All right, and last but not least, here's number 10, peso. I'll be putting a piece on daily effects later on this. Maybe it might take a little more work to kind of get the levels nice and clean, but wow, right? Not enough people were watching this. I tried to keep you updated on SB earlier in the month, but it was a really pretty crazy move. At the end of the day, the reversal turned right ahead of the 2017 high. That was 2203.76 right here. Weekly chart, you're looking at an outside weekly reversal through support. Those can be through points. Those can be, segues for resumption of trend. We're already hitting the first level lower, though. My whole point, and what I want to say, it's the high week close for 2018. It's the highs that we made in late 2018, December. It's 2061. Okay, a little bit lower from where we scratched this week so far. Essentially, you're looking lower below 21.29. And if we break, there's a lot of room, right? So that's the weekly chart for peso. Here's dollar peso on the daily chart. Okay, so same pitchfork we've been following, nothing's changed. Kind of a fake out last month. We thought the 21.90 break here was legit, kept us looking lower, it failed, straddled it again. This was just a massacre of many people probably. And here's the move lower. So look, here's the 1618 off the decline from the highs we made in June. Soft target, 2067.88. Could see a little bit of a bounce here. It came a little bit later than expected, but there we are. Little bit lower. Okay, slope around 2054. But, next fib consideration, next slope consideration on the downtrend is all the way down here. 2070, 2007, 50. Here's what it looks like on the intraday. So that rebound that we were looking for, right? Messy. But my point being is that breakout, you look for completion. How do I know that the breakout's complete? How do I know that this is just not a pullback? We'll test support and kind of go off on our merry way. The uptrend of the breakout is now broken as well. And that break did fuel accelerated move, albeit ugly, or in pretty treacherous times. And again, you can be as liberal as you want with this and kind of makes it a little bit cleaner, but you get the picture, right? So it's a break. It's a break. You're looking lower. At the end of the day, I have us at near-term support right now at 2067.88, but any recoveries from that mark, as long as it stays below 21.23, 21.23.16 here, weekly open resistance, that Friday low, you're looking for the resumptive move. Questions on peso? Okay, whew, that puts us through all of FX, or at least everything that's on my list. Where is gold? Gold, 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 gold. Well, my friends, we might be on our very way back into resumption mode. So, excuse me, 1935 is the level I told you guys to look at. That's our bearish inval, or the resumptive trade rather. Weekly chart, I want to highlight some levels here. The reversal close for the year, post high, record high, is 1932. Watch the weekly close. That's what capped the September rally before pulling back. Again, don't take my word for it. There's a 3-week stint. That's where we maxed out every time, 1932. Watch for a weekly close above that. Daily. Okay. Here is possible channel resistance break. Channel or not, it is a resistance break on a trend line basis. You have one touch, you have a two touch. Here's the third, here's the fourth yesterday. This would be the breakout. Daily close today above this level, keeps the focus higher. First level, 1935. It's the 38.2 of the drop. It's the highs, 1932, what we just said, from last month. Watch out. Watch out. One more time, again, we have another trade at resistance or at support right into the open of the session with major event risk on tap. So, man, guys, if you're not excited in this market, check your pulse. Hey, Mike, long time no see. Hey, March, and great to see you. It says Sterling, Oz. Okay, let me get to those in a moment. Any questions here on gold? So 1935 is a resistance zone near term. Watch for a reaction here today. Here's what the intraday chart looks like. Again, all things held constant, it's a breakout, right? Oh, here's gold from last night. I told you guys to look for a break of this range. It was really clean into the open of the month, or the open of the week, well, the open of the month as well. Rally failed right at slope resistance, pullback pulled it right ahead of major key support. November open, 618 retracement. I loved it. Wanted to see a break of this range for guidance. Ideally, it was going to be the downside break, right? But the dollar strength and the break that we're seeing here, how long does this hold? Listen, objectively, we're still under last month's high. We're still under fib resistance, right? It depends how granular you want to get with it. I was looking at this earlier today. Again, objectively, well, what does that do, right? It's a break of upslope resistance, really? While markets are rallying? I don't know. 1935 is still going to have to be the gut feeling. We're still going to have to stick with our guns, right? Discipline. Discipline. Couple other things I was looking at this morning, I just wanted to kind of like highlight for the breakout scenario. Maybe this is you get a larger bounce correction before, again, we still maybe see another low. The 100 of that move would take you to 1945. Well, if that extension makes sense, well, is there any slope along those same reference points that'll help? Maybe, right? Maybe. We'll have to see. But watching today's close for gold for guidance. Especially if this breakout is legit, you don't want to see anything on the downside. You want to see 1912, 19. These highs from last week, you want to see those hold. Okay? All right, man, it was a long list today, but I'm glad I got through it all. That was 11 for gold. So let me get your pairs here. Marchin, you're looking for Pound Oz, Aussie Key, and Aussie CAD. Pound Oz looks like this. Breakdown, breakdown. Whoa, what a fake out, right? So, okay, so upper parallel or the median line at least held. First draw, break. Okay, bear with me one sec. Okay, we already have the retracement on here. Might as well just add your 50 since you're there. Hmm. Okay. I don't see any slope gradient that kind of would pop out at me to work with. This is going to be too shallow, although that was a nice break. Kind of stretching it. And this would be too sharp, in my opinion. Although if you take into account maybe just monthly trends, like from the monthly open, from the weekly open, um, even that's too tight. Look, it's a breakdown from near-term upslope support. We've obviously been tracking this for you, Marchin, for the last couple of weeks. So I do think that's a breakdown. I think the break below 8180 keeps the focus lower from here, in my humble opinion. But 180 is a big spot, aside from it being just a big round figure, right? You got the 1618 of the slope from the decline, right? High, low, high. And then the 50 of the advance. And just a pretty, I wouldn't say decent, but not a bad pivot zone in price. I just wish I had some structure for the decline, and I don't. Well, that might work. You got here slope, resistance, breakout, support. 25, 75% line's pretty messy, but might be something worth watching, right, Marcin? But point being, recoveries should be governed by like 8180, max 82. I'd be looking for a major support or a major inflection off 180 on the downside. That is pound Aussie. Number 11, 12, Aussie key. Ugh, this thing. Right. So let's just play with this for a minute. Bear with me one sec, Marcin. I haven't looked at this in a while. This false break in the downside, quick recovery. Hmm. So under normal circumstances, I tell you, I'd want to see a convergence zone. So here, so again, I'm just going shotgun approach here. Ready? Low day close from the decline that you made back here in September gives you 107, right? 107.30. I like the slope. I've been liking the slope. I didn't, wasn't a big fan of that breakout there, but the pivots have been pretty decent, right? So here's your median line resistance. Here's the low close, low day close from September. I would have loved for this to be like a 38.2 of something. In fact, let me just take again, bear with me. This is going to look crazy messy, but oh, well, it's a 50. So still not a conviction range, but you get the picture, right? Look for a reaction here, right? You ready? Today would be already your 5th consecutive daily advance. It's a pretty nice range. Again, your opening range lows from last year also come at 107.60. So area of interest for possible exhaustion on this near-term front, and you look to assess the playback, but low conviction trade for me. I just don't want to be part of the long side from here. All right, hope that helps, Marcin. I know it's short notice there. Aussie CAD, real quick. I got to run, but here's a quick look at Aussie CAD. That's testing the uptrend or the resistance of that downtrend that we were looking at. Do you remember? I think you asked about this last week. Someone must have, because that caught the high literally to the pip right there. Here's the pullback. Here's the breakout. Looks a little cleaner in my opinion. Again, I'm not sure where this 618 is coming from, so let me just let me just cross-reference this real quick. Okay, look for resistance in this 20 pip zone right here. Not even 20 pip, it's like 15. I don't, let me get you where that 618 at 95.06 comes from. I'm not sure if that's going to be relevant here. Okay, it's the entire drop off the 2016 highs. Yeah, I mean, it's been a decent pivot. All 3 of these zones on the breakout. All right, Marcin. So 2 things I'd want to look at. One, just basic parallel. Right? Again, gives you kind of pause there. Nope. Nope. Stick with that. Watch this. Watch these top zones here. He says, yes, thanks. All right. You got it. Wow. 9:30. I got to run. Guys, thank you so much. Best of luck trading. Keep it simple. Keep it concise. If the setup is there and you have a conviction and you have a proper risk reward and your management, risk management and tolerance are on board, go for it. I don't want to stop you. There's tons of opportunity out here, but you have to be nimble. Okay? Don't get married to a trade and be willing to walk away if the market goes against you. So a lot of event risk on the next docket for the next 48 hours. Okay? Don't forget, again, later today, you have the FOMC interest rate decision, and you have that presser with Powell. Obviously, he's going to pad everything with what's going on in the markets. I think the fact that the Senate is still in the Republicans' hands kind of thwarts some of those concerns that a Biden administration might have some radicals, kind of in the Treasury and all of this. So I think the markets are taking it in stride. Watch for that FOMC announcement tonight. Tomorrow you have employment from CAD, so watch dollar CAD is a radical move that we've seen already. So you have dollar CAD employment numbers and non-farm payrolls again tomorrow on tap as we wait still for the election. So guys, if you're not tired yet, you will be by the end of this week. Best of luck trading, and I'll see you guys all on Monday for the free session on Daily FX. Right back here on Tuesday and Thursday. Cheers.